What's up, guys? Hope you're doing well. Just want to do a couple of trade recaps for you. I'm still in the game, still doing my thing. Just been a little busy behind the scenes. Bought a house back in October, so fixing that up a little bit. And it's spring now, so we're doing a lot of yard work and getting a big garden going and whatnot. So been busy. Had another baby in November, so she just turned 6 months old. So my dad died in December. Yesterday would have been his birthday. So just a lot of things going on. It's life. We all have our lives. We all have things going on in them. So I appreciate you guys understanding. That I'm busy. You're busy. We're busy. This is a crazy world we live in. But anywho, have some partials running. I took about 75% off of these trades today, but still have a little bit of going, break even. Looking for just going to trail it on structure. So let's get into it. So it's the beginning of the month. I always like to start on the monthly chart. So going into the week and the month, I was bullish on GJ. And I took a small loss on GJ earlier this week, more or less a little less than break even, or a little more than break even loss wise. I think it was maybe $150 or something like that. But anywho, so I always start on the monthly chart, and if you just look at the chart here, let me get this a little bit bigger here. Let's see. If you just look at the monthly chart here, you can see there's wicks. And typically, if a candle opens, the candle, and you're expecting it to be bullish, the candle will open. Get a different. The candle will open, so you have your opening price. So if your bullish candle looks like this, typically what you'll see is you'll have the open price. Price will move down, and then we'll move back up, and then slowly put in. This is really ugly, and then we'll close. That's kind of an ugly drawing, but you get the idea. So typically the candles will open and seek liquidity, some type of liquidity. Now, just from past data that I've collected on GJ, your typical monthly candle wick, either to the upside or to the downside, is very rarely less than 100 pips. So if my monthly candle opens and moves down, but then it flips bullish and closes on towards the highs, or closes bullish for the month, typically that lower wick that you see is going to be at minimum 100 pips. Now there are occasional weeks or occasional months where you don't get much of a wick, but it's very rarely that you don't. All these little wicks, if you come in here and you measure from that one's 98 pips, so the top of it's 157. The top of that one's 80 pips. The top one of that one's only about 40 pips. But typically, you're going to have 50 to 100 pips at least of what I call manipulation. So if your bias for the month is bullish, typically you know, you want to see that trade lower first before it closes higher. Now we're still in the beginning of the month, so there is a very real possibility that we will trade back and go lower, but the setup was there for the bullish side. And going into the month, you know, I try to predominantly trade those that direction of my bias. So, but I'll explain why I traded to the downside a little bit earlier in the week. So we opened up here again. So we opened up right there for the week. And if I bring on the, let's see here, what am I looking for? Structurally, you know, we're bullish on GJ, right? We came down here, we took all these lows, and then we consolidated a little bit, and we started to flip bullish. I was expecting that monthly candle to come and trade down into probably more along the lines of like down into these areas and then flip, but so far we didn't do that. But the trade setup that I took earlier on in the week, which was a small loss, was, let's see, Monday, was on Tuesday, and I had a decent amount going into the close Tuesday, but pretty much it closed on its lows, opened, and then just ripped higher. So that trade idea was just based off the hourly chart, just trying to get on the line of the movement down. I was kind of selling after we opened for the week and already moved down quite a bit, down into essentially some support. So, you know, not the most highly probable setup. It wasn't a full risk. I think it was maybe, you know, $200 risk total. So not a whole lot, but I was able to mitigate that loss a little bit. But anyways, just impulsive correction, you know, impulsive moves. That's kind of what I'm looking for. And we had a little bit of an impulsive move in the London session. And then coming into New York, we had a bit of a retracement back up into kind of a little fib cluster, fib zone here. And there was kind of a trend line from our opening price wick up here down like such. We kind of came up, retested a 618, 786. I got in somewhere around here, somewhere right around 191. I don't remember which candle it was exactly. I'm pretty sure we had already retested. Yeah, so 7, I usually sit down, you know, around between 7 and 9 is typically when I sit down, Eastern time. Between 7 and 9 Eastern, I usually sit down and start looking at the charts. So we had I came into the week, or came into the day, sorry, I'm just woke up from a nap, but looking to sell, and I was looking to trade down into this negative 23.6, also targeting kind of these lows here. I was anticipating these lows to get taken. In line with kind of that monthly idea that overall I am bullish on the month, but I wanted to see it trade lower first. So I was trying to get in line with that idea. And got 50, 60 pips, depending on where exactly I entered. I think it was right around 191. So I think max I had was, 65 pips or so. And it literally, like, this was the closing candle. So it closed on its low for the day. And once we kind of broke and closed below that low, my original stop loss was just above these. I wasn't a huge fan of these equal highs going into the trade, but the setup was there. Because I feel like, they're kind of a draw for liquidity. It's an obvious place that people put their stop losses. So I try to plan my trades to enter where people put their stop losses, so to speak. So I'm trying to enter when people are getting stopped out, or buy stops, or something like that. Those high probable order placements. So anyways, got a little bit of movement there. Once we broke and closed below there, I tightened up my stop to just above this high. So, it was about 20 pips worth of risk. And that candle just blew right back and stopped me out shortly after market close on Tuesday. So now you have to, I always try to tell people it's okay to kind of have an idea. So again, I was anticipating the market to trade lower, right? And I was trying to get in line with that, but there's a point where you have to say, okay, just step back, look at what the market's doing. We're super bullish, right? We had this impulsive and then corrective structure here, and had a huge impulsive move up. If we fib that, so this is our kind of little swing point here. We came down into the 786, and yeah, we closed a little bit back below it, but overall, once that Tuesday's low was put in, we had an impulsive move up. We ranged a little bit, and then we had another push up. So that kind of changed my bias a little bit. So I abandoned the short ideas and started to look for long opportunities. And one of the little tricks that I like to do with fibs, and I don't know if I came up with this or if it's just a pattern that I recognized over the past 10 years being in the markets, but I like to identify those impulsive moves that took liquidity. So you can see we have, what is this here? This is late London session lows, and we took those, and then we had that impulsive move up. We broke, kind of that ugly little trend line channel down like that. Broke and closed above our previous high. So again, mapping the market, which I preach. So if we just look from when we opened, we got that high there, this high there. We'll just map it from here. Find our newest low. So this is our new low. We come back up. Where's our next little lows? These are our next lows here. So this is the way the market's going. We have those equal lows there. We have a new low, a new high, or a lower high, and then a new low. So that high was broken and closed above, and we put in this, and then now we are starting to flip bullish like that. All right, so you can see the roundness to it, all right, as price is flipping bullish. Okay, now going back to the fib trick, I don't know if it's really a trick, but it's just a pattern that I recognized some time ago. So I use it for entries a lot, and if you were to go back and back test it like I have, it has a very high win rate. I will say the identification of the impulse move can be a little subjective, which can cause trouble for some people. If you want to try to objectify, if that's the right word, your trading as much as possible. So like if then process, consistent analysis, doing things the same way. So if you back test it and it works for you, that's great. Just do it the same all the time. So the fib in question that I fibbed was this right here. The reason why I chose and left my fib this way, and it's not to say that this fib was incorrect. It still held. It just gives me a little bit more precision when I identify what I'm looking for in that initial impulsive move. So this initial impulsive move after we took the London lows going into the New York close, we opened, we ripped up, broke structure, retraced, we filled the fit. Now this is the important part. We filled the 50% and left the 618 and the 786 before unfilled, and then we traded right up and validated the negative 23.6 and left the negative 61.8. So these fibs, so this fib has been validated for me because we came down, tested the 50, ran up, tested the bounced off, respected the negative 23.6, and then we just kind of consolidated here a little bit. Let's see, into the morning session of Wednesday morning, and it wasn't until Wednesday, I think there was a news announcement where I was able to enter. We got that spike down to my point of interest, and it was the 618. I typically enter on the 618 with my stop at the invalidation point, and that's where I entered there. You can see my entry was just a little bit above it due to the spread, but as we came right down there, it was a beautiful entry, just pretty much to the pip. As soon as I entered, we got sucked right back up. My stop was that invalidation low, and I was targeting that negative 23 or the negative 61.8 fib extension of this impulsive move. And then I also throw in, the sore thumb low to sore thumb high as price was printing it, going into those extensions as well. So that was the initial trade idea on GJ. But because we had gapped and didn't really trade higher, that was my first target for my partial. So this was a really nice trade, pretty much entry to target, first target right away, and that's why I took partial profit. And also due to the fact that there was some pound news coming out this morning, I didn't want to, sometimes when you get this directional move going through the night, London session, sometimes you'll get, New York reversal or whatnot, and we'll, come back down much lower into this range. So I took 75% off of that. That was really nice trade, and I left a runner for that because overall, again, I'm bullish on GJ for the month, so I would like to see price continue much higher, and ideally, I mean, I know it's a pipe dream, right? But potentially retest these highs. Why? I mean, look at that risk to reward potentially. If I can trail this correctly, and GJ continues bullish, that's going to be an awesome trade, right? Of course, that's like 2,000 pips, but again, it's possible, right? I've seen GJ do some pretty wild things, right? So anyways, hasn't really given me too much structure to trail off of, other than just like this hourly candle here. So that's where I have my trail stop right now. Depending on if we can trade back into the weekly, or even just continue higher, break and close above this, I'll probably leave my stop right here for a little bit until we get a little bit clearer structure developed on the 4-hour chart. I would like to see, maybe something like that. If we come back down, trade back into like that weekly gap area there, and hold that, and then move higher, break and close above this. That'll give me a little bit clearer structure to trail. But anyways, so that's GJ. Again, I'm not necessarily anticipating price to shoot up 2,000 pips, but it's a positive swap on GJ, so there's really no reason not to try to hold the long as possible. I'm not paying anything. In fact, I get paid to hold it due to the positive swap. So that's GJ. The other trade this week was UCAD, which was a super nice trade. Now, I am kind of overall higher time frame bearish on UCAD, and the reason is if you come back out to the weekly chart where you can actually see it. Let me just take these off real quick. You can actually see it a little bit better on the monthly chart. So we have established, an upper boundary there. And then also you can visualize the lower boundary. So just a huge range, right? Now, so you have your supply, you have your demand, and then just a big range in the middle, right? So what I was anticipating for the long term is to kind of trade a little bit lower back down into, maybe the equilibrium of this range, or the equilibrium meaning the midpoint. So if you just kind of subjectively pick, if we just do the low there to this high, kind of the midpoint would be that 50%. And you can see that's kind of a flip zone, right? Where, buyers step in above it, sellers step in below it for the most part. And you can see just how well overall that's been respected within, a couple hundred pips. This is a monthly chart, right? So keep that in mind. So overall, I'm not trying to, necessarily trade this to new highs, because you have to keep the market context. What's the market doing? What's it trying to tell you? Right now, we're just in this ridiculous range, between 146 and $1.20, right? So keep that in mind. So not necessarily trying to trade this back all the way up to the highs. I don't know that it has the juice now that we've reached the apex of this, or the all-time high. All-time highs? No, not quite all-time highs, but most recent highs. I mean, this is all the way back to 2016. So supply, demand, the trade idea, once we dumped off this, we started to trade back lower into basically our previous, consolidation area here, right? Before we ripped higher. Now, how are we approaching that is important. If we're just straight lining it, it doesn't make a whole lot of sense just to jump in and buy with the hope that it's going to hold, and it may. You may get this sharp reversal, but typically you'll get some deceleration down into some levels, and that's exactly what happened. I'm not a huge fan of this fib just because this is kind of a wonky candle here where we had such a huge gap up back in February. So my fib was essentially this point to this point, because that's the majority of the bullish run. Then we consolidated, then we had that gap, that gap up before we broke structure to the downside. So we are essentially, we were at that 618, putting in a kind of a squeeze or just a downward sloping consolidation pattern off the high. And I did use this from that high to that low because that's pretty impulsive. We came back up, pretty much tested that 618, and then just filled the negative 61.8 fib retracement this week on the 6th. And that was pretty much the idea, right? So we have the 618. We have a really nice previous support level here that is on the 618. And so as we whittled down, and this was my third entry actually. My original entries I took off, and this I went heavier on this just because of where we were at. So this was a very profitable trade for me. And so we you just clean that up a little bit. You can see we are working our way down, but the lows are getting weaker and weaker before we're starting to see some bulls step in. And we had that third test of this lower trend line. Typically, you'll get those three pushes just from what I've noticed over time. You'll get those three pushes. I'm not a huge fan of the way this is because it's a little bit of a mess just with this fake breakout. But if you connect this point here, and then these points here, and then this one, that one, kind of just says, this was maybe a little overreach, a little fake breakout. It wasn't really established yet, because this is our initiation point. And, so you could make a case for that, but the way price was respecting connecting it here, here, I felt like it was a valid lower channel trend line. So we pushed in three consecutive lower lows. You got lower highs, and then we had that little bit of a last push down to retest that, or to test that negative 61 fib from the higher time frame, and then close back above. Couldn't close below, so I treated that as a liquidity grab for that 618, and then based my fibs off of that. Again, same little fib trick I did here. Get that main fib, that main, I think it was even on the lower time frame here to really get it a little bit cleaner. Okay, yeah, so this is, I think I might have even used the 15-minute chart. So I go down and I really kind of pinpoint it so that it works, just to validate that fib. You want to find that point of, okay, so where did we really start breaking structure to the upside? And this was kind of like our last ditch effort for the bears before we started to break structure on the lower time frame, right? So we had this little channel, we pushed down negative 61.8, and then we just kind of had this kind of shelf established here. And then we had this little channel, we broke out, we retested it, and then we pushed up, right? So really this candle here was the last push down before we started to break some structure to the upside, in my opinion. Again, it's subjective, right? But again, from that low to high, we come back, we retest that 50%, leave the 618, the 786, and then we validate that fib with the negative 23.6. So the 618, 786 are in play for me. So my entries, original entries, were, I believe, right down in here. 618, can't remember exactly. I think my original entry was 78, I think. Something like that. Right down as we were testing that 618. My stop was below that negative 61.8, that spike low. That's my invalidation point. The whole trade idea for the bullish scenario is based off of this being a liquidity grab, reach for that negative 61.8, retest that channel low. I don't want it to go back down there. The damage is done for anybody who was trying to sell down here. There's really no reason for it to go back down there, especially now that we've established a little bit of bullish structure. One of the other reasons why I like doing this little fib trick is because it establishes additional liquidity. You know, you can see we consolidate here a little bit. We put in some lows. Anybody who's trying to buy breakouts to the upside got slammed if they had their stop losses down here. So that's a good place for me to put my stop loss. Now I held this full position. My third entry, which was this one, was on this wick low. Again, you know, you just fib. I think I fibbed that. Or this one, I don't remember. It was based off of one of these impulsive moves, whether it was this or that, 50 or 618, something like that. But by this point, so this is how I scale in a little bit. We had already started to break structure to the upside. I didn't want price to come back all the way back down to my entry. So we had broken out of this little thing here. We manipulated lower. There's really no reason for it to go lower again. The damage is done. It's already taken orders. We've already flipped bullish again in line with our original bias. I don't want it to retrace all the way back. I'd rather get break even and have to look for a re-entry another time if the trade idea is still valid. That was that entry there, right down in here, 37.93. So I had taken this off early this morning. I took 75% off of that position, off at 38. I think it was 88. This is getting to be a long video, but reason is there was some morning news this morning, I believe, and we had put in this little reversal pattern, you could call it. Granted, this is the 15-minute chart, but typically when you see these types of things, you can get a breakout and it can retrace much lower to at the very least, to the beginning of this and to the low. I had already pretty much anticipated the price coming up at minimum to this area here. So we reached that right before the news. So I didn't want to risk price coming all the way back, you know, maybe coming down back into some of these lower fibs. So I took 75% off. But yeah, so I'm targeting, again, keep in mind what the higher time frame chart's doing. I'm targeting kind of essentially the highs of this little squeeze pattern here. So that will be, you know, another $333 somewhere. I'll probably take it off, somewhere around here. Might not be necessarily up there, but I might actually lift this a little bit just to see, and then trail it to see where we can go, because there's some pretty strong candles coming out of here. So I don't necessarily want to just take it off, just in case we do trade back up into, some of these support areas, which may become resistance. So, that would be another couple hundred pips, another 100, 200 pips or so. So depending on what it looks like going into tomorrow, how the evening session is, might lift this up and just trail it. Again, this is another positive swap, so there's really no reason for me to try to squeeze as much as I can out of this, because I've already taken 75% off. So maybe kind of come up around this trend line here. This is a nice impulsive move, and we haven't really gotten any decent retracement out of it yet. Let me delete some of these other things. So I would like to see price come up into this area here, actually, before looking for shorts. That's a really solid impulsive move that hasn't really gotten any retracement, valid retracement. So those were the trades. This trade was, I think, 1,500, 2,000, something like that, when I pulled it off. And then I have, a couple hundred floating. So great trades this week. GJ was another really good trade. Great week. April sucked for me, I'm not going to lie. That was actually so January, February were really good months, positive. I think I had maybe 2 or 3% in January. Real good month in February, I think 5 or 6% gain. And then March was break even, like less than 1%, just over break even on the plus side. And then April was sucky. I think it was because I was super busy trying to just rush into some trades. So that was actually a minus 5% month, I think. But right now, so far with these two trades, I erased April, and I'm sitting good for the month. So I just got to coast, which, I know this video is getting long, but trading is one of those things that is truly a test of your discipline, your patience, the process that you put into it. I've been trading for 10 years, right? And I'm not $1 million trader. I'm not going to lie to you. I haven't made $1 million yet. But, I remember when I was making, $5 trades, even $2 trades, So I started at the bottom, and, I'm just slowly growing my wealth. I'm very minimalistic. Once I made that switch to get rich quick, and just started focusing on the process and realizing that, hey, this is a wealth building tool. The best investors in the world, average just a few percent a month. If you can average 3 to 5% a month over time and just compound your account, you're gonna be well off. You're gonna set yourself up well. Work your day job, use this once you get to the point where you're consistent and you don't go on tilt, or at least you can recognize when you're about to go on tilt and you can just step away and you can really manage your downside. So, I had a really terrible month, and actually, March and April were pretty terrible for me. I was super busy with everything. My dad passed away in December. So I've been down to Texas a couple times helping my mom get organized. We're going to move her up to the town I'm living in. We're going to move her up to be up closer to me. And so I was just super busy. Kind of let go of the process a little bit, of my routine and the way I plan trades, and would just sit down. It's like, oh, I haven't taken a trade this week. Let's sit down and see if we can find something. And when you sit down and you go hunting for trades, typically it doesn't necessarily end well. It's when you sit down, you have a clear head, you got a nice hot cup of coffee, you got a full belly, and your mind's calm. You've slept well. You don't have a whole lot going on stress-wise in your life. You can just sit down, no care in the world, and just really plan out these trades, set limit orders or alerts, and just no stress in it, no confusion. You're able to kind of visualize the market and say, hey, what's my bias here? Where do I want to trade? And when you can really just get into that routine of doing it that way, that's when you have your best trades. You're not going to win them all. I'm sitting 50% right now, maybe. But I win a heck of a lot more. Like this trade here, I think was close to $2,000 total, maybe, just on UCAD. And I think max risk I had with the original 2 entries, they were 2 standard lots, was maybe $250, $300, something like that. And then once we got to a point where I could scale in, I added another little bit, just to, I tightened up my stop loss, and max risk was 1%, right? So, or less than that. So that's where I'm at these days. And it's a continual process, though. Even with me, like I said, April and May, March and April were terrible months. Just my routine was off, like I said, and I was rushing stuff, and not the greatest. Not the greatest. I don't know what this is popping up here. Not the greatest. I did take a trade on Aussie today. I don't know what this is. What's going on here? Because I had closed that off. Yeah. So that was a $300 trade, Aussie. This was a day trade. I'll just go through it real quick. Bearish structure. You can see higher time frame. We took liquidity, broke structure to the downside. That 1, 2, 3 punch, fibbed this. I was looking for a little bit deeper retracement, but we came up into that 50% retracement, and this was a 5-minute chart entry. So once we pushed up, filled that, my level of interest was kind of right in here, and once we flipped, I went short at 24. No, I went short at 28. My original stop was up here about 37-ish. No, it was about 10 pips. About 40. I was targeting London lows. I was able to get into a second position, fibbing this. I had a limit order filled just shy of the 618 just so I could get filled. And at that point, once we had pushed down, I had tightened my stop up just there. So again, that's how I scale in. And then this stop loss was there, targeting London lows, took it off at 98. That was about a $300 or $400 trade. All right, guys, I gotta go. Good talking to you. I hope you trade well, trade safe. Let me know if you have any questions.